Welcome back to Nuclear News. I know I'm always excited about the nuclear space, but I have never been this excited about nuclear and uranium in my entire life because the math is undeniable. And we're starting to get some deep value in some of the assets associated with uranium because prices are starting to dip. So let's dive through exactly what's going on. First, price action. Sprott Uranium Miners ETF up 4.94% year to date. This is the bigger cap basket of uranium stocks. You can see it rolling over just the last week of April significantly. The S&P 500 rolling over the last week of April. So it's a broad-based market-driven sell-off. S&P 500 year to date up 6.21%. So the market is soft. That's causing very high quality assets to sell off, including the junior miners, which are actually still outperforming year to date, up 9.41%. But you can see them starting to roll over, right? So this is where the deep value in the space starts to emerge because the math and the supply demand fundamentals are once again absolutely undeniable. And this is just one example. This comes from Kraken Energy Core. Their forecast for global uranium demand is showing a threatening supply shortfall, which could annually reach between 150 to 200 million pounds. And when you look at the charts that all show well out into decades from now, huge increasing demand and shrinking supply, it paints a very positive picture regarding the upward price pressure on uranium. And this chart I have not showed you before, but this one blows my mind. Commercial inventories supply. There's lots of supply available for commercial purposes of uranium from 2018, 2023, and now it's dropping off a cliff. And you're wondering why the spot prices are rising so much. It's mainly this, okay? This is everything to the space because what it shows is yes, we've been in a supply crunch on uranium, but the commercial inventory supply could make up for that. Well, not anymore. And into 2025, there's practically none. So the supply crunch and the upward price pressure on uranium should just accelerate into 2025. This is why dips in these assets start to get me very excited. Where are these inventories going to be replenished? That is the question. And right now, there is nothing on the horizon showing how it's going to be replenished. And these utilities are going to have to pay an absolute fortune to get it replenished. And then we have this constraining supply even further, potentially. White House eyes Russian uranium import ban while House bill stalls. Talks underway about banning imports of Russian reactor fuel. Russia provides almost 25% of uranium fueling U.S. reactors. So they're considering banning imports of Russian uranium specifically. They haven't been able to yet because we're so desperate for it. But this is just something the White House is considering, which would obviously be rocket fuel for the spot price of uranium to constrict it even further in the West. These headlines speak to the massive growing demand for nuclear energy and therefore its underlying fuel uranium. Italy energy minister announces plans to join European Industrial Alliance on SMRs, working groups aiming to create federal reactor roadmap by June as Rome embarks on return to nuclear. Climate and energy concerns see support for nuclear hit more than 60% in Finland. Energy Industry Group calls for common European market for nuclear power plants. UAE planning second nuclear power plant, right? So huge, huge demand incoming. And these models showing skyrocketing demand again are not factoring in the headlines we cover each week. They don't have time to factor in the exponentially increasing demand of uranium occurring every single week. Why the AI industry's thirst for new data centers can't be satisfied. Supply bottlenecks slow the scramble to build bigger, more powerful utilities. The frenzy to build data centers to serve the exploding demand for AI is causing a shortage of the parts, property, and power that the sprawling warehouses of supercomputers require. What do they require? Uranium. And this chart from Zero Hedge shows how Goldman Sachs believes that uranium is going to be a crucial component of artificial intelligence. They are calling out Cameco as a provider of the nuclear fuel, right? So again, this is just massively increasing demand for nuclear and uranium. And again, when I say we're in the early stages of the nuclear renaissance, part of it is because there's brand new technologies rolling out, which are going to expand it exponentially. And they've barely hit the market. But the SMR market, small modular reactor market, is expected to reach $295 billion by 2043 from practically nothing today. That is massive for stocks like NewScale and like other SMR providers. So much going on, deep value, supply crunch does not get better than this, especially as the prices of these assets start to enter that deep value territory. We'll just continue staying on top of this space.